I say me, I just wanna make this money.
All right. Good morning, good afternoon, and good evening. It's still the voice of the real effects of GW training. Welcome to this presentation. This presentation is titled Trading Price Action the Right Way. A lot of you guys must have learned different ways, of trading, differently, and also understanding different meanings of price action, and price action is defined as what price or the general market is doing with respect to a particular time. So it is the action of price with respect to time. That's how I defined it. I don't know how other people defined it. And the action of price, in a particular environment, a particular period, a particular time frame could actually differ when you are looking at it with respect to that time frame. All right. So if you're looking at a daily time frame, you would have a different meaning. You have different sight or view of what price or the market is actually doing with respect to a daily time frame. So you look at it on a weekly time frame, sometimes you might have a market that is actually trending, to the upside, all right? It's actually making higher highs and higher lows. You're looking at a much lower time frame, say a 30-minute time frame, all right? But if you're looking at a daily or weekly time frame, you notice that market is actually more of doing a downtrend, all right? So it's the difference in the difference is the time frame. All right, so the price action with respect to time frame is what we are going to be discussing today. So I'm going to be showing you how you can actually look at those things, and understand what the whole market psychology is. All right. Now, I want to start by saying, if you have not subscribed to this channel, I would recommend that you do so right now and you hit the subscribe button. Also hit the thumbs up button and also ring the notification bell so you get every update from me. All right. So, and I want to look at, if you have a market that's actually making lower low, lower high, lower low, lower high, suddenly you have a market that then goes down. Suddenly you have this level as a high, and suddenly you have a candle, a candle here, a bullish one. All right, at the end of a particular week, here through all this and then close here. Now, what this automatically tells me as a trader is that price has taken out all these structures here, but just cannot close below here. So I will wait for a confirmation. If I'm to open a buy here, I can open a buy around this zone. My stop loss will be down here, but I will need to wait for a more suitable entry, say around here. Around here. If price will actually retrace a little bit, I can look for an entry around that point to the upside. Thereby, for price to have stayed in breaking through this point, one could either mean rejection or an embrace. So for price to come into an area, you need to identify that it could either be an embrace or a rejection. So if price up actually, so but some situations you might actually see this is not a rejection, you might actually see price, the next candle will then come in this nature, all right, and then still close below, all right, next one come in and close, and you can see that the next one can actually come in and close above, and price then continues to move like that. So it all started from this single candle here, So we're going to look at setup in the chart just like this, and then we will identify when this one has failed. So it started with this one, with this candle here, but you need a confirmation with this candle, and as price keeps approaching this point, you need to wait for look at the confirmation how this candle will frame in terms of its week in rejection. Okay, you then identify if it's actually a rejection or it's an embrace. Okay, or it's pierce through. Okay, so we'll just look at some few charts and then look at this setup which I have just talked to you about in multiple time frames. So we will just go straight to look at those charts. Okay, a typical example, we have a typical example here, this setup here, right here, right here. So we'll just check this out, all right, and we just make, you know, so we can be able to see it. Let's just make that very unique, okay, in its nature. Just make that unique, fine, beautiful. So we have this environment. This is the environment we're working with. Remember, this is in a downtrend, okay? Suddenly, this candle came in here, stayed above this structure, and then, created this point here. What do you observe? Okay, so next candle actually came in bearish, but couldn't break below here. Next one, bearish, couldn't break below there. So your level is here. At the trader, your level is here. Next one came in, couldn't break in here. Okay, the next candle, if you're looking at the whole of this environment, all right, you would understand that this probably is be on a daily time frame. All right, so this is the 7, 6, 5, 4, 3. So this is Monday, this is Friday, this is Monday, this is Tuesday, this is Wednesday, all right? Wednesday couldn't break below the structure, and if you're looking at on a weekly time frame, okay, we would then identify that on a weekly time frame that this was just a pullback. Okay, this was just a pullback, creating rejection, and the next candle actually came in bullish. All right, so everything started back here. All right, it was just a pullback. The next candle came in bullish. So as a trader, what I want to be doing is I can be looking at a bullish, bearish, and kind of structure. Okay, so I'm going to explain this also in a very short while with examples. Okay, so this happened here, and this actually came into this zone. Now, guys, look at this. Okay, so this is a rejection. Okay, this is a rejection. As you can see, that price came in the following week. Okay, came in the following week, but couldn't break below and then rejected this point. Okay, so automatically, what we're looking at as traders on a daily time frame, is that price have so far rejected this point. And now, whatever we are doing, we are looking for bullish setups alone. So if we go down on the H4, we will see how price then drop down, all right, forming this ending diagonal here, all right, something like the structure here. And with this candle here, we just get it off the way. With this candle here, price broke out with this candle, and I could have entered a buy trade here, and I would hold it all the way to target the upside of this point. And let's see what our risk to reward trade would have looked like. Okay, and let's see. We'll take this. Our risk would be somewhere down here. Okay, for a breakout, that's 116, and our target would be 5 to 9. All right, 5 to 9. Everyone's to 4. And look at how long it took to complete this trade. 1 week. This was on Thursday. Next week. All right, so 1.5 weeks, and the third week we hit our take profit. Now, what am I saying in general? What I'm saying in general is that you need to understand what is happening on a larger time frame to be able to understand what is happening on a lower time frame. So all this happening here, 1, 2, 3 candles, is the whole of this. So all this is the whole of this, guys. So if we go looking at this, we'll see that this was contracting. So even we can check this out, and then I see a wedge pattern in front. Yeah, so if we go down to the daily, we would then identify that all those happening there was just a wedge pattern, all right, on the H4 here. So with this candle alone, which I spoke about, look at guys what happened here. Look at how this candle pierced through. You see the distance. Okay, see the distance of this candle. Even on an H4, you would be able to see the setup I was talking about also we were seeing downtrend. Suddenly a certain candle came in, pierced through all the structures here, and see how this pierced through this area here. The next candle came in, filled the next candle. So it's looking bullish from that very point on. So automatically you can actually enter a trade anywhere and then put a stop loss down here. And you can see that voila, you're in profit, you know. So it's much easier, right? Okay. But you need to, the whole genesis of the whole thing or the whole setup boils down or goes down to us being identifying or being able to identify this kind of thing. All right, so let's go look at another chart. I'm just going to do this randomly. I don't have any chart in mind. Okay, I think okay. I think I have a current chart I'm going to present to you at the end of the presentation. So I just want to make sure that everyone gets something. Now, look at this chart here, guys. This is a Monday time frame. Let's look at this. We had a rejection of this point. Let's come down here. Let's take this out quickly. This was a rejection here. Assuming rejection, 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 huge rejection. Look at the distance from here up here, rejected. Definitely, whatever happens here, we can expect that this can actually continue to come into testing and rejecting this point one more time. Now, we have another rejection here from Monday time frame. All right, but this was a pullback. Now, what is this? This is a pullback. So if you look at this pullback as a whole on a weekly time frame, we will identify that this was a pullback. So this was a breakout of the pullback with this candle here. And this actually gave a signal because of coming into here, we saw this indecision candle here. So if we still go down on the daily time frame, we will be able to see another clear identification that the next candle, it all started here. This came in as a fading structure but fell. All right. Next one fell and it was standing bearish. Now this candle did not just take out this; it took out this and rejected this one. Okay. So definitely, as traders, we observe that one, apart from this being a new month can come with its own setup or its own structure. Okay, and we identify that on a weekly time frame that this was also a new week. Okay, it was a new week. Apart from being a new month, it was also a new week. Okay, and this here rejected, and we saw how it rejected up here, which the next candle was supposed to be bearish. Okay, so but on the new week, it was a new week, so that institution structure happened here. Okay, but this was on 4th. It was 4th. This was on the 8th. So this was a new week. When this next structure came in, automatically, what I knew from how I knew from that point on that a new week, if you look at this point, okay, on the H4, look at that environment on the H4, we will be able to see more clearly, okay, that this here is a new week here, okay, on the daily, this came in, so there was really no structure for a rejection. The only structure we had for a rejection was this environment, and we saw how this clearly rejected at the end of the week. Okay, how this clearly rejected at the end of the week. Also, from a monthly perspective, we then saw what happened here. That and then this was the previous month. Okay, the new month came in, rejected this in a hurry. All right, for the new month, this was the very first week of the new month. Rejected this point, came an additional candle on the daily. So this also came in as a bullish engulfing pattern, okay? It also came in as a bullish engulfing pattern. So you need to identify structures and area where you can start putting in this price action into the game, okay? So this came in as an indecision candle, okay? a bullish engulfing pattern. Second one came in as ancient candle, and we saw that the next candle actually came in to close above. So definitely we knew from that point on that we had a bullish structure and a buy here, a stop loss here, can actually take us back into where, guys, back into where. We're looking at back into breaking the structure and also testing the upside. So looking at the upside, we're looking at a Fibonacci extension of the 127 from this point on, and we can see, voila, we got into that target of the 127 Fibonacci extension. So I'm going to make a presentation on my next session, how to use the Fibonacci tool correctly. All right. Okay. So if you've not liked this page or subscribed to this channel, I advise you do so that you will not miss any updates of mine. All right. Let's just go further. Now we are back here. So we have rejected this point one more time, but this huge strength. So we're just going to have to shift it a little bit to the block area here. So now we have another rejection here to the downside. Okay. So, but the area so far we have not rejected is this. We have not rejected this point here, this low here. So what do you expect to see? What do you want to see? We have price rejecting up here, rejecting here, rejecting here, rejecting here, rejecting here. So definitely what we want to see is price coming into testing this area one more time and looking for liquidity to the upside. Right. That's what we want to see. But first, before we are looking for short opportunities for price to come down into this point, then we're not going to buy in a hurry until there's a rejection of this point. When there's only rejection of this point, only can we look to buy. So we look at the weekly time frame, what can we see? First, what we can identify is that we saw it failed right here. So the bull started getting here, continue here but couldn't move far, continue here but couldn't move far. And we then saw our price then did a truncate. And what we expect that if this current weekly candle can close as a condition candle, if the next week candle comes in to close in this structure, I think it would be a nice time to buy to target this point. But this next candle should actually come into rejecting this point. So we are not going to short immediately. We are going to wait for the next candle to come in on a weekly time frame and reject this point. So from this point on, we are not going to look for any trade whatsoever for next week for the Euro GBP. All right, because definitely at this point, we have not decided what we want to do. There is no indication. We are midpoint of the lows, of the highs, no rejection. Price will actually move in its own format, okay, over a period. We're not sure what price intends to do, but on the daily time frame, what can we identify? We have identified that price so far with this candle here has formed a bullish engulfing pattern. And we want to see price from this point on. We did not come into the trade here. This was also rejected, and so far we have seen price looking strong for a bullish setup. So price can actually look for a way to come into testing and rejecting this point. But what do we know? As traders, what we know that we want to put up a sell position here only when there's an injection up here to actually come into targeting this point. And when that will happen, guys, when that will happen, I think we should be ready to actually take that trade, because from here on to this high here will be 59 pips. From here on to this low will be 168 pips. So that would be a very good risk to the risk reward ratio trade. But overall, we want to be bearish on this trade because definitely we don't have any reason whatsoever to be bullish on this trade. Okay. The next setup I'm going to show to you is I'm going to show you the bullish, bearish, bullish, bearish setup. Whenever you find such a setup in the market, what do you wait to do? You wait for either this. If this was a daily, daily setup, on a daily time frame, you want to wait on the weekly. Let that weekly candle close, which is the biggest time frame. If you're on a weekly candle, let the monthly close. Now we have such a structure here. Okay, so this was bullish, next candle came bearish, bullish, all right, but all those candles couldn't break above this key structure here. So if we will look at this whole environment and then compare it with the weekly time frame, you will know that it is only then you will have a structure in the market. So you will not, or you should not, if you're bearish on this market, the longest week or the first longest week outside will be your stop loss area. So your stop loss should be up here. Why you enter the trade here to downside? So we started this low. Let's look at it on a weekly time frame. So how did this point end on the weekly time frame? We had a structure here. So what was the structure we had? Let's look at the structure we had for the monthly time frame, and this was the structure there. So this was the structure there. We just need to shift this to align with this, and that was the structure we had from last month. Okay, for weekly time frame, this was a level which we wanted to see broken. On the daily time frame, we had this huge structure, and this was also a level we wanted to see broken. And look at this candle came in so strong that the previous level here was rejected with this very candle and closed below here. And next candle was looking for an opportunity to come up to this point, and this huge rejection here, all right, setting price down here. Overall, we know that probably from this point, the next candle bullish, next one bearish, stop loss will be up here, and you can see that our target will be up down here. So if you're looking at risking from this point, okay, this point, okay, coming to a trade from this point to this point here, this will be 597, and our risk will be 5051. I don't think that would be a good trade to take. Okay, but if you would allow price to at least come into the peak, okay, somewhat, if you look at on the daily time frame or the H4 rather, you would identify that while price was pushing up, okay, we had a level here. So with this level here would be a very nice time to start looking for those short opportunities to the downside. This was a level to look for short opportunity from the H4, and by the time price could actually reject this point with this candle, okay, you know you have a trade, a possible trade. So a possible trade would be to short at this point, and risk would be 27 pips here, and the target would be to the downside here, which you had 72 pips. That would be a very good trade, and you're out of the market. When you're out of the market, what you want to do next? You want to wait for the next daily candle to actually move up again. Now, when the next daily candle came in, you saw what happened here, guys. The next daily candle, after this point, moved up and then closed inside of this area, rejecting this area one more time. So what was this area on a weekly time frame? Let's look at it. On the monthly time frame was also a very good structure, which we saw here. From this point on, rejecting also this point. So you need to understand and then be able to think, what is the market doing? All right, market came in here, rejected this point. All right, now the next situation in the market will be to short to the downside. Okay, this was on Monday, Tuesday. Market then rejected this point on Tuesday. Wednesday dropped. Thursday, bulls got in. Friday, market closed in this format. So on that Friday, we had price closing in this area here on Friday. Monday came in, DS took over the market, took over. All right. Now, Monday, Tuesday, Wednesday, Thursday, Friday, broke below. Monday, DS took over the market. So what I'm going to do in the next few weeks, I'm going to wait for bulls to some sort of come back into this point here. Why that point? And a lot of people asking questions why that point, because this was the area which this suddenly got into the market suddenly, and whatever is happening here, I cannot buy here. I just want to see the market actually rise on its own into rejecting this area here. This is an area I want to see rejections of. I want to see a rejection of this point. Only when price can actually reject this point. Once price reject this point, I'm going to put a pending order there, and I'm going to execute it so very hard. And my stop loss will be somewhere above here. And you know, it's going to be up here, 9 pips, and my target will be to the downside, 168 pips. Where do we want to see this low which we spoke about? only when there could be a rejection of this point. And we're looking from it from weekly time frame. That point is the 0.9092 area. Also on the weekly time frame is the key structure also we have here in the market. So that's how we do it back here, and that's how we trade. So we look for setups in the market. Those setups are what gives us an edge. Also similar to what actually also happened here with this candidate space. So from that point on, we'll start to look for bullish opportunities. And if we go down to a lower time frame, like the daily time frame, we could also see that at that point, we then started to see setups with this, and we had this huge low area, and that was the point which we want to start making our trading decisions. Okay. All right. Okay. What do I tell you guys? Before I wrap this up, let me just give you a quick recap of by next week we're going to look for opportunities to buy the Euro JPY. We look for opportunities to buy the Euro JPY because it is going to move so coolly up. Okay, it's going to move up freshly. Okay, it's going to move up so cool. All right, it's going to move up so it will be cool. It will be cool to see. Okay, that'll be cool. Change that. I don't know. All right, so we're going to look for opportunities to buy that. So if we look at this, what is happening here? All right, look at what is happening here. This is a bullish pattern, but we have a high up here, which wasn't taken over. But last time price came in, rejected this point. Yes, came in from that point. So there's still much bid in the market here for a low, right? But we can actually expect to, a little bit push to the upside, to still be up for grabs. Okay, still up for grabs. We just need to look at everything critically. Here we had bullish, okay, confirmation, BS got to get in, bulls got out, and we just need to mark those levels carefully. But I think you can actually have price coming to test these points here. Let me look at it. If we would have it set up nicely, I think we can actually, we actually looked at coming in here, today we just on 4 pips, and we target 250 pips. I think the whole market next week will be dependent on the election results. Okay, so we just need to wait for everything to unfold when it comes to election and everything. Now we're going to understand what we want to do with the market. But for this structure alone, which is the CAC CHF, I am certain that price is going to move up from Monday. Okay, I'm certain that price is going to move up from Monday. It's going to move up fast. Today on the 6th, I'm expecting on the 8th that when the whole market opens, okay, on Monday, that price is going to move to the upside. All right, price is going to move to the upside early on Monday. Okay, it's going to move for the whole of next week. I'm looking at being bullish for the CAC CHF. Okay, so I'll speak about it briefly. Come on, internet. I'll talk about it briefly in this presentation, and I'll show you why I think that would be the case. All right, now let's look at this a little bit. This structure was more of in a downtrend. Okay, this was some sort of environment, where price happened to stall. Okay, but with this candle here, okay, with this candle here, next one being bullish, I think price will try to come in and test this high here. This is the high which I expect price to come in and test. And once that would happen, so whole of next week, we will be looking at a possibility of market coming into testing this high here. Why do I expect to see that high? Monthly time frame, this could have been a pullback. So price is coming to reject this point here. It was the highest point. So price is coming to test and if possible reject that point. So we want to see how price is then act instead of that environment. We have started to see rejections. I speak about this many of the times with the student that if you know what to trade, whenever you find this candle in the market, look for highs and lows. wait for rejection of it. Now, at the moment, we are having rejection of this candle, either a rejection or an embrace. We can only put up buy order here. And that rejection here will actually further confirm us and we look for a better pattern of some sort, then we can then move to the upside. Only when we can have a rejection of this point. So these are our key area here. All right. So this was just a pullback. If you look at it from a monthly time frame, all of this drama. So right from August. So we'll look at August, September, and so this was just a pullback. And what we need to see with this is here, but at the moment we are still rejecting this high here. So we need to some sort of see price actually here breaking this structure, because this could actually still end up being a diagonal since this is rejected and can actually still continue to the downside. It's a huge possibility also for that happening. But at the moment we are having this rejection at this point, so we need to see how price then move from that point on. But if price can actually break above this structure, I think price would have its way, possibility of going to the upside a little bit higher. That's what we think, and you know, and we'll just have to reevaluate the session for next week and then see what's happening and how we can actually come into the market. But with this candle alone, I think I would be more bullish than bearish in this setup here. Okay. With that, I think I'll just wrap up the session. If you want to learn more, you can actually ask how you do that. Okay, if you want to learn more, you can actually drop a comment and then ask. We'll give you links and description on how you can actually learn more and then check the right way. Right now, I would say good night, guys. Love you.